Gautam, good morning and thanks so much for joining in. Very briefly, if you could explain what the theme of this report is and how can we apply it in the Indian markets in terms of picking the right stocks.
Sure. Good morning. So today, popular perception, if you see in India, has always been that growth investing, which is a predominantly working theme. And given where markets are at today, 9,600, 9,700, a lot of the usual sectors have done exceedingly well. The same set of stocks have provided excellent returns in the last 2-3 years. Valuations being where they are, in a way it shows that there's a lack of, or rather the growth is not broad-based, and that is in a way reflecting in the way market is behaving. So we thought at this level of market, it will be very interesting to look at some alternative frameworks to find out if there are more ideas which can be gleaned, which have not been very popular in the past. And that is what has driven us to apply this framework to the Indian markets. Now, contrarian investing has been a very popular theme globally. We thought we'll just see whether it applies to India or not. And the way you summarized in the beginning, those are the two buckets within which we have looked at contrarian investing in India. One is obviously the popularity of the consensus rating on the BSE 100 stocks, and we have backtested last 10-12 years of performance on a quarterly rebalancing basis. And second theme we have looked at is the valuation multiple, and of course there are several sub-themes within each of those themes. So net sell to net buy, consensus sell. There are three buckets we have looked at in valuation: price to earning, price to book. So those are a mix of things that we have looked at. The approach has been more data-driven and con-driven, without allowing any inherent biases to basically creep into this analysis. And as you can see, most of the ideas that are mentioned there today, they're not very popular. But if you see the data of the last 10-12 years, applying this framework has helped in India.
Gautam, good morning. I take that point that this is completely free of bias, because I'm looking at your top contrarian sales, and some of them are the ones where we have seen huge bull calls from Motilal Oswal, and we have seen, of course, money being made there. The likes of Eicher Motors, Bajaj Finance, Escorts. But problem here, Gautam, is that we've seen how liquidity can sometimes, throw valuations out of whack. Is that a risk to some of your sell calls as well?
Yeah, so before I mention that point, just a normal disclosure which we have given in the report. Some of the ratings which are mentioned in those calls may not necessarily be in consonance sync with the bottoms-up rating that the analyst team may have. This is clearly a very top-down approach based on data and cons. Now, coming to your second point, I concede that liquidity has driven this market for the last 12 odd months. But if you look at markets from a longer-term perspective, it has always followed earnings. There have been times, there have been periods, there have been bunch of 3 years, 4 years where liquidity as well as fad has allowed few sectors to trade at valuations which are way above what they've usually traded at. Now, what are those sectors in the last 8-10 years? One obvious is consumer. Consumers P used to be 20 times 10-8 years back. It is at 35-40 times depending on which set of stocks you look at. So yes, at times it will play havoc with your fundamental thesis or even your valuation-driven traditional approach. But end of the day, over a long period of time, I don't think, of course, there is a limit beyond which a valuation can re-rate. It has to follow up with earnings, right? And we have seen multiple times, there are evidences in the last 10-15 years where valuations have reverted to mean. Valuations do not go just one way. They have reverted to mean in multiple sectors in the last decade or so.
So, Gautam, I noticed a fair amount of interesting stocks in your contrarian list: Axis Bank, PNB, Idea. But I think the two ones that really caught my eye was Sun Pharma and Tech Mahindra. These days, nobody really wants to buy these kind of stocks. So let's get your sense. Why these two?
Yeah, nobody wants to buy. That's why it's contrarian. Now, you look at pharma sector as a whole. In the last 2 years, the kind of carnage that we have seen in pharma, earnings as well as valuations as well as the stock prices, all the large top 4 pharma have underperformed significantly in the last 24 odd months. Now, we are not saying that all of them have become buy because there are various stock-specific, sector-specific factors at play. One of the stocks that we have highlighted, as you mentioned, is Sun Pharma, and this is where we have the highest conviction on from a longer-term 3-year, 4-year perspective. Now, things may not recover immediately in the next 3 months, 6 months. There are multiple issues at play. There is GST which is being implemented from a domestic market point of view. There's buyer consolidation which is happening in US market. There's a pricing pressure, base price erosion. All of those factors are well known, and which is why this stock is trading at a 30% discount. We think that this is a great opportunity to get into this name from a 2-year to 3-year perspective. Coming to Tech Mahindra, obviously another sector where things are looking very pessimistic. People do not want to look at those sectors. And if you see in that report, we've highlighted 2 or 3 sectors. We have given a call that pharma is a contrarian buy sector today at this point of time, whereas technology in our view is not yet a contrarian buy as a sector. But there are obviously stocks which are trading at a substantial discount to their long period average valuations. And even there, we are not saying things will improve in the next quarter or quarter after 2. But can you buy today and hope that the downside is limited? The answer to that is yes. You may not derive significant outperformance buying those stocks today, but clearly we think that from a 2 to 3 year perspective, these are interesting levels to look at.
Okay, Gautam, I take your point. You know what? We need to take a break, but stay on. We'll come back and continue our conversation.